So, thank you very much for joining us this session. First, I would like to introduce our dear guests. Vahe Avakian, head macroeconomist of Central Bank of Armenia. Ildar Kamachev from Landesbank, head of regional sales Europe. Elene Tskhadaia is joining us from Bank of Georgia, head of global banking business. Constantine Saroyan, Secretary General, Federation of Eurasian Stock Exchanges. And my friend and colleague, Grigori Zakaryan from Converse Bank, head of investments. So, despite the significant progress in recent years, Armenia's capital market is still nascent. Reforms towards strengthening the legal and regulatory frameworks, in my opinion, the most important, the creation of pension fund, increased the level and the importance of the capital markets. Nevertheless, the challenges still exist, such as high dollarization, lack of diversity of capital market products, limited knowledge of capital market instruments. They are still limiting the long-term development. With my colleagues, we will try to explore different hypotheses on how can we close this gap to trigger the development. Before starting the discussion, I will ask Vahe to give us a short snapshot on the Armenian economy to see where we are standing now, in what context we are working now.
Sure. Thank you very much. It's a pleasure to be here with you all. If we could please get the slides up on the screen, that'd be really helpful. Great. So I'll start by providing a brief kind of overview of the macroeconomic landscape in Armenia and some of kind of the journey that we've been on over the past couple of years. And I think that'll provide a nice segue for the conversation that we're going to have this afternoon. So I'll begin by just briefly noting that, of course, economic growth in Armenia over the last couple of years has been extremely robust and continues to be the case. In 2022, we had GDP growth of 12.6% year on year, and that was followed by growth of 8.7% last year. I think cumulatively over the past 2 years, we've had, I believe, the 5th highest growth rate of any economy in the world, which is, of course, a remarkable feat. And so when we look at the kind of contributions and what's been driving a lot of that growth, we've noticed, of course, a lot of this growth has been driven by strong activity in the services sector. That's been supplemented, of course, by kind of subsectoral growth and things like IT services and so on, which I'll touch upon in a second. And, of course, kind of construction activity has also been strong. In the past few months, we've kind of been seeing economic activity kind of shift a little bit structurally, still continuing to remain at very robust levels, but we've kind of seen manufacturing continue or begin to play a more prominent role in recent economic growth. So we don't have official numbers for Q1 yet, but the sense is that they would continue to be at relatively kind of strong levels. So let's talk a little bit about some of the underlying drivers at play in the economy. And at the Central Bank of Armenia, we try to think about the implications of these macroeconomic developments through a kind of risk management centered focus, where we're thinking about the sources of risk and uncertainty. So I'd kind of encourage you guys, as you're thinking about these developments, to kind of try to put that kind of hat on as well. So, of course, one of the major economic developments kind of globally, regionally, was kind of some of the ramifications coming out of the Russia-Ukraine conflict. And looking at this from kind of a macroeconomic lens, and in particular kind of some of its implications macroeconomically on Armenia, for us this, from that lens, represented kind of a hugely kind of positive external demand shock, where we had a large kind of significant flow of capital, labor, and tourism flows into Armenia over the past couple of years. And To look at this kind of through the lens of one kind of specific sector, we've of course seen the tech sector, which was already kind of on very strong footing in Armenia. A lot of kind of foundations in place for this to be an important driver of kind of medium and long-term growth. This was certainly supplemented by the inflow of kind of highly skilled workers, kind of an entrepreneurial mindset, and so on. So that's really contributed to a lot of growth in this sector, and this continues to be kind of an important driver for our kind of medium and long-term outlook, though that's certainly only one component. What we've seen in recent months, coming out of obviously that external demand shock, I kind of talked about some of the impacts it might have on our growth and kind of potential and things like that. But of course, flows of that scale, of course, represented a kind of aggregate demand shock as well. So we had kind of significant kind of demand pressures and inflationary pressures emerging at that point, and that kind of required the Central Bank of Armenia to respond pretty prudently and aggressively with our policy actions in order to kind of make sure that we're able to kind of keep these aggregate demand pressures contained. During that time frame over the past couple of years, we've of course seen kind of some pressures in the labor market, similar to I think most other countries in the world. These kind of overheating labor market conditions have kind of gradually begun to recede, and one of the factors contributing to that is kind of growth in labor supply that we've been seeing over the past few months. So you can see that kind of the unemployment rate was at kind of historical lows over the past couple of years. Wage growth was at relatively high levels, but this has all started to somewhat moderate, and again, increases in labor supply driven by things like, for example, greater kind of flows of migrant workers from places like India, as well as kind of narrowing wage gaps between Armenia and a traditional kind of destination for Armenian migrant workers, which is Russia. We see those wage gaps narrowing somewhat, so perhaps looking forward, that may be an opportunity to kind of disincentivize some of those workers from going abroad, and perhaps might lead to some increases in labor supply domestically. Again, thinking kind of in terms of potential, where this might head and potential opportunities there. From a fiscal point of view, in this context, kind of unsurprisingly, in the context of this kind of robust GDP growth, tax reforms, and kind of an improved expenditure structure, we've seen kind of fiscal health continue to improve. Debt to GDP ratios have continued to decline, while revenues have been increasing. We've also been seeing kind of some improvement in how capital expenditures are being carried out, and a gradual kind of reduction of the share of current expenditures. So all of this is kind of very positive developments from the sense of looking out in terms of a medium-term outlook for the implications of fiscal policy on the broader macroeconomy. The banking system similarly experienced a lot of growth over the past couple of years, as I'm sure my colleagues will attest to. What we've been very pleased to see, of course, is that the banking sector remains very well capitalized, largely above regulatory requirements, and is quite well positioned, I think, to be able to deal with a lot of any sorts of risks that may emerge. So this is all really good. You can see some of the indicators that we have up on the screen. Liquidity ratios are really high. Capital adequacy ratios, non-performing loan ratios are at kind of historical lows. So all of these is really, represent really positive developments that speak to the overall kind of health and kind of growing robustness of the financial sector. And lastly, to kind of tie this all together from the perspective of monetary policy, which is kind of the perspective that I kind of represent, is obviously in the context of the kind of successive demand pressures that we face, first and foremost kind of coming out of COVID. We of course experienced some demand pressures there, as kind of on the one hand you had households beginning to kind of consume again at high consumption levels, and that was kind of spurred by kind of, on the one hand, pent-up demand, kind of increased savings, growing kind of household net worth. And then on the other hand, kind of as we're easing out of kind of supply bottlenecks, that's obviously contributing to some demand pressures. So the Central Bank of Armenia was actually one of the first central banks in the world in December of 2020 to begin raising interest rates. So we began that policy tightening cycle pretty early on, and that actually allowed us, if you kind of look at the graph on the left, you see inflation starting to kind of dip towards the end of 2021. And so we were largely on a path to kind of bring inflation back under control, and then of course we were faced with an external demand shock in early 2022, which again created a number of kind of additional demand pressures, and so that forced us to react very kind of quickly, aggressively, and I think prudently to bring inflation back under control. Over the past year, I think just over a year now, we've had inflation continually decrease. It's been below target for over a year now. And so this has been great in the sense that we've been able to begin our policy loosening cycle, and have been on that path for almost a year now. And I think this kind of contrasts positively to some of the developments maybe we've seen in other kind of advanced economies where there's still kind of questions about rates remaining higher for longer, higher kind of global neutral rates and things like that, and all those implications that might have. So yeah, that's kind of the overview of the macro environment in Armenia. Thanks.
Thank you, Vi. Any questions from this side? Just if you have any question, just raise your hand and we'll take them. Also, we have online followers, and for them to make their questions, the code is 2487839. They can access to the platform slido.com. Grigori, I will ask you to give us a short snapshot on the capital markets in Armenia.
Okay, well, thank you. Just early presentation, a couple of slides in order to get a sense into the capital markets, what the capital market is in Armenia.
It's not appearing on the main screen.
But here in screens,
we can.
Can you see?
Here we go.
Oh.
Okay.
Okay, just a couple of slides to what capital market is in Armenia and what's going on here. So it's dominantly a government treasury market. If you can see that 3/4 of the total capitalization of the market is composed by government securities, that's treasuries. And the second being part, but it's far away from the government stock bond shares, is corporate bonds that are basically issued by banks. It's 15%, and the residual part is actually in equities. It's around 800 million in US dollar terms. So basically, the 7.8 billion market is 34% of the GDP. As you can see on the right side, we have a growth of this ratio, and the boost is coming from the 2020 after the COVID years. But basically, we have a steady amount of corporate bonds. That is not so good situation in here, but we have growing path of government securities. That's what can we just further discuss and how to describe this situation. But the market, if we see the fragments of the market, the government treasuries, so we see that mostly those are issued in long-term segment. So we're having here prolongation of the duration. But as for the market debt, we see that the trades are too low. So if we see the trades within a year, it's let's say 15% of the total outstanding volume of all of that, and this is a big challenge. So those are tradable compared to, let's say, corporate bonds, but we see that this figure is too low. What is very encouraging, we see that in this market we have newcomers. So starting from 2021, we have an increasing fraction of non-resident investors here in our market, and this is quite encouraging and happy thing. So we think that this path will further grow on. As for corporate debt market, the debt and liquidity is much more less than in case of government securities. So we see that only 9% of tradable trades are being done within the year compared to the outstanding balances. But what is encouraging also here, we see the newcomers, we see new issues, and the issues are 111 issues as of the end of 2023. All of them are listed in Armenian Stock Exchange, and this very good dynamic is actually starting from 2020. But when we see the weights of all of that securities, you can notice that 59% of all of these issues are coming from the commercial banking side. So this is a kind of transformation of deposits into securities. But the good part of all this story here is that we're not only trying to transform the deposit into securities, but also the depositors into investors. And this is a very hard work and very complicated, because it's a kind of change of mindset.
A very good signal, right?
Yeah, you need to do this. And when I remember that we're trying to do this starting from 2017, it was quite hard work because it's a kind of mindset change. Okay, but here we have also a good part of US dollar denominated corporate bonds issued here in Armenia, but the MD level is also steady. And the last slide is about the equity market. So what we have actually non-marketable equities here, around 800 million in USD terms. As we may see that capitalization of this market compared to the GDP is about 3%, and this is a too low level compared to the peers, to Georgia, to Kazakhstan, Russia, Uzbekistan, etc. A few issuers, 12 issuers, and those are 4 banks and 1 telecom company that has effectively and placed and did an IPO last year, but still this is non-marketable market, let's say, and we need to, and that the big challenge is here to drive this market. And finally, who holds all these securities, the capital market? So we see that the banks are mostly commercial banks. We also have a good participation of pension funds. As you know, that we have a compulsory pension funds who are holding this debt. They are also using the corporate debts.
In my opinion, that was the main reform that pushed the development of the capital market.
Yeah, indeed, and they are very actively engaged in corporate bond sector and in evolving this market. And here, basically, we see what the challenge is now here in Armenia. We see a kind of liquidity drain from our commercial banking. I mean, the US dollar liquidity to the global markets because of the spread. We have a positive spread in global markets right now, but this is a challenge because this liquidity is not residing here in Armenia and not helping to develop the market. That's the big picture, I guess.
Thank you, Grigori. As you know, empirical studies are showing a very strong correlation between development or level of development of capital markets and economic growth. Some studies show, or in some cases, the capital markets are fueling the economic growth, and in some cases it's the opposite. The economic growth is triggering the development of the capital market. What is the case in Armenia? In which side are we?
You know, these are both interconnected processes, so you cannot say it's like a story about the chicken or egg. What is the first? But here, I believe, from my perspective, as I see that the economic growth is pulling capital markets, and specifically those are financial institutions, commercial banks who are trying to create this type of market here, and yes, doing the business of investment banking here. I mean, going to the new issuers. The main challenge here is to find a good, eligible company who's going to issue some debt or some stocks. In case of stocks, it's quite uneasy, but because not only the, let's say, the corporate governance application need to be done in the company, but also they need to overcome the emotional biases to go to the market, to open their company, etc. Nobody wants to share.
It's a matter of education
yes,
as well, right? Sophistication.
Sophistication, but mainly, the challenge is that we need to go and to try to chase them.
So the hypothesis is that economic
growth
is
pulling. Yeah, economic growth is pulling actually the capital markets. Yeah.
Thank you, Grigori. Vahe, the central bank has a keen interest in developing efficient capital market. As we know, it is very important to have well-established capital market institute. I will not tell you the benefits. You know much better than I. What are the efforts the central bank is doing for such a purpose?
Yeah, thanks. So I think we certainly share in that view that, of course, capital market development is incredibly important. I think for driving long-term sustainable growth, it's something that we think, of course, certainly kind of as a starting point, agree is very important. I think I'll try to answer that question less by talking about more like tactical initiatives and more kind of what motivates our overall kind of view and strategy for supporting capital market development. I think as kind of first and foremost, the most important kind of foundational pillar for capital market development in Armenia, and certainly I think any country, is having kind of a stable macroeconomic and financial landscape. I think without that, if we have macro instability or financial instability, I think it doesn't matter what types of initiatives that we're involved in. I think no matter what, that foundation needs to be there. So from our perspective as a central bank, our constitutional mandates are specifically price stability and financial stability. And we think that by ensuring that, we can create the proper groundwork for capital markets to develop. So that's kind of the first kind of most important, I think, foundational principle that guides our kind of actions and decision making on this front. The second kind of point that we've always emphasized, I think, ties into what Grigori was mentioning about kind of this emotional barrier and that kind of thing, right? So for us, what's always been important is this idea that we kind of need to see that kind of pull from the companies themselves in terms of wanting to open up, wanting to conduct business in a more transparent way, of kind of living up to these higher standards of transparency and accountability, and kind of overcoming that kind of emotional barrier, right? So I think our job here, and it's not just the job of the central bank, I think the Ministry of Economy and our other partners in government, I think, play an important role in kind of helping foster this and push forward these kinds of things. Yeah.
Oh, thank you. Elene, I turn to you. As I think I mentioned you, that Georgia is seen as a benchmark for Armenia, for Armenian economy, and especially for the financial sector. You guys have successfully listed 2 companies in London Stock Exchange, and I wonder, what have you done? How did you attract so many foreign investments? What are the key reforms?
Thank you. It's a great pleasure to be here with everyone, and thank you for inviting me on the panel. Maybe before I jump to the challenges that we as a company overcame throughout the past 10, 15 years to achieve certain success in capital markets, I will give you the brief history of what Bank of Georgia is doing nowadays in these areas. Well, in 2010, when we first saw the opportunity of having foreign international investors on the local market, we saw the challenge of not having the unified legal and IT infrastructure. And since then, we've been heavily involved in negotiation with the regulator as well as the CSD and the central bank, and with their help and with huge involvement from our side, we've been developing these two major directions, which were the big challenges back then. We had like two CSDs and a couple of registers where you could potentially settle the trade. And saying that these different infrastructure service providers were working in a different way, different procedures. Some of them were paper-based and some of them were semi-automated. So unification of this infrastructure was very, very critical for us to provide a service for the international investors. Another thing was the legal infrastructure. We had a couple of key concepts on the market. However, having a nominee concept, which was protection for the international investors, having the asset segregation and protection rules, some reporting and reconciliation requirements properly formulated and articulated in the law was very, very critical. And then we've addressed these problems. And nowadays, I could say that regardless, we as a commercial organization, we benefit from this. The market, the capital market benefits from this a lot. Yeah. Because
it's a win-win. The win-win situation.
Win-win, because currently we serve one of the ICSDs. We provide local custody for them. And we also serve the number of global custodians on the local market. And we are the specialized depository of the Georgian pension fund, the very similar fund that Grigori was just mentioning. And I would assume that I would agree with the colleagues with the chicken and an egg problem that the infrastructure, both legal and the IT, gave us the possibility to structure this service, provide this service for the global custodians and one of the ICSDs.
Thank you.
Thank you.
Thank you, Elene. I'll turn to Ildar. Ildar, thanks to your position, you had the possibility to explore, to work in different countries, in different regions, especially post-Soviet countries. I'm sure Armenia shares a lot of characteristics with the rest of the post-Soviet countries. And according to you, according to what you have seen, which country could be considered as the champion or has a more advanced level of development? And yeah, that first.
Thank you. I appreciate to be here. Thank you. Indeed, there are a lot of common ground between post-Soviet countries. In my point of view, typical for the region is the lower liquidity capitalization compared to more developed countries. It's also often sensitive to political and economical changes in the region. What else? Low liquidity, I already mentioned. Limited diversification, then concentrated sectors. It means that a market is dominated by a few sectors like energy, banking, agriculture, mining. Then also such specific issues like local the currency risk, because the
dollarization,
no? Yeah, because the local currency may be volatile and subject
lack of trust.
Devaluation, it's affecting market capitalization. It's a big issue in my point of view. Yeah. Then also some issues like undeveloped infrastructure, regulations, developing regulations. It's a lot of factors common for the region in my point of view.
So these guys have done a good job in keeping the prices stable.
Definitely. So, and to your second section, I can say that in my point of view, in our point of view, most countries have already made a lot of efforts to understand the situation, the needs, to tasks to be done, and to to create capital markets in their individual regions. In my point of view, the true champion is Kazakhstan, with a strong natural resource market, with progressive regulations and policies, then also with well-developed legal systems, and also with such institutions like International Financing Center of Astana or Kazakhstan Stock Exchange as a leading stock exchange in Central Asia and sufficient for the region. So, and I can say I also a big fan from a huge fan from Georgian fan, because in my point of view, Georgia it's the sole country that could manage to improve the environment and improve the legislation. For example, it is another direction maybe, but it is a netting destination. That it means Easter agreements could be used and derivative transaction could be done without any reservations. It's very important for the market. And what else? Maybe last year I have heard that they have managed also to establish the legal basis for covered bonds. And covered bonds is, in my point of view, it's a very important product, very common in Europe, especially in Germany, and very popular on both sides, investor sides and issuer sides. And in my point of view, nobody can imagine German capital markets without covered bonds. And covered bonds, maybe just for information, it's debt securities issued by the bank or mortgage institutions and collateralized against the pool of assets. It is so important product. So I wish that also Armenian could implement such law, because it is a big combination. Also, it's a very good product for both sides. Yeah.
Thank you. Thank you. We'll take note on that. Thank you very much. I'll turn to Konstantin. Konstantin, a key factor to the efficient functioning of the capital markets is the development of efficient stock exchange. Thanks to your position, you had the possibility to explore different countries, to have a closer look to capital markets in different countries. Could you identify what are the key drivers for a successful development of stock exchange?
Yes, thank you, Rand. Good evening, probably already to everyone. So my name is Constantine Saroyan. I'm a Secretary General of the Federation of Eurasian Stock Exchanges. However, we unite not only stock exchanges, but also CSDs, also technological companies, developmental institutions, uniting those whose mission is to develop capital markets in particular regions. So currently we are uniting 30 plus markets, including Armenia, Georgia, Middle East, and Eastern Europe, so post-Soviet Union countries. So yes, indeed, I'm quite familiar with what is happening all over our region at least. And, but before that, I would like to say thank you to EBRD for inviting us for this event. I mean, me and my colleagues. Also, I would like to say thank you to Converse Bank for organizing this panel, this session. This is, from my perspective, is extremely important. And I would like also to share a brief story about the Federation and why I'm so excited today. The Federation has been established in 1995 in Istanbul, and in 2017 the headquarters moved from Istanbul to Yerevan. And that happened due to big support of our members and also of EBRD and some persons who has been actually heading capital market in EBRD, within EBRD. So Andrei Kusvek is currently here. So big thanks to to him, because with his support and with EBRD support, we have a federation, an organization like FEAS here in Armenia. And I would say, as far as I know, this is the only international organization headquartered in Armenia, which is not linked so much to Armenia. It's not an Armenian region. So, of course, Armenian Stock Exchange and Central Depository are our members, but as I said, so we have other members as well. So it's not a kind of pure Armenian federation. But that's a short kind of intro advertising about the federation. Now coming back to your question, so what are the key factors? Look, we are supporting different markets and different governments, regulators, etc., in different countries. And the situation is different in each of them. However, most of them has been adopting the regulations, probably US regulations or some kind of, how to say, a form of US regulation then posed to the post-Soviet Union countries, let's say, or EU countries. They have their own one, but again, much of that has been taken from US because US is considered as one of the leaders there. So, but still, there are differences. Differences comes from, so I will go from top down. So let me keep timing because I can talk for an hour. Okay. So the difference, first of all, comes from the regulation perspective. So how many regulators do you have? For example, if we are taking Armenia, it's mega regulator. If we are taking other countries, there are usually, typically, it's central bank and I'm talking about financial market. So central bank and Securities Commission. But there are, for example, countries, if we are taking Uzbekistan. So in Uzbekistan, so we have been, we having a conference just in April, our flagship conference in Uzbekistan, and I have been surprised that on opening remarks there were some kind of 5 regulators, and each of them has been regulating some part of the financial markets, and so you do not understand whom you should deal with, you know. Having one-stop shop.
Clearly, like clear playing rules are key for the development, as Elene was mentioning.
Yeah, but it's not only about that. It's about ambitions. When you have several regulators, each of them would like to regulate as much as possible, and they want to grab from that. If you have one mega regulator, so central bank, they are monopolists there. So, for example, in Armenia, so what they do, they can develop banking sector, or they can develop capital market, or they can develop both. I mean, there is no conflict of interest from that perspective. So first, coming down, so regulation. How to structure the regulation in a way in order not to have the conflict of interest between regulators and some sectors of financial market, but also to support the development. Mm-hmm. Second thing, we are coming down. So trading venue, where securities should be traded. Typically, first which comes to everybody's mind is that it should be stock exchange. But for example, that's not the case for Georgia, or that's not the case for other post-Soviet Union, let's say, countries, or even for European also countries, where the trades are OTC, or probably the banking sector is more developed, so companies and investors prefer to deal with the banks, etc. So that's another point which should be considered and should be thought. Where securities should be traded. OTC, for example, when it comes to Georgia, Bank of Georgia and TBC, they are covering the entire market. As Elene just has been saying, that they are performing the function of CSD.
Almost entire market.
Well, yeah. There are small peanuts, let's say.
Not only.
Yeah, but I mean, banks are taking the function of the stock exchange and CSD. That's another story. It could be. I'm not saying that there is a brilliant, idealistic some kind of model, but if we are talking about developing capital market, so infrastructures, how to develop those infrastructures. There are, again, several methods how to do that. First of all, you should pull as much volume for trade there as possible. This means that you shouldn't, that's my opinion and that's what I see in other countries. You shouldn't split the market. For example, the government bond should be traded and should be settled one way, the corporate bond another, the equities another, etc. So you are fragmenting the liquidity and you are fragmenting trades. So when you are pooling that in one place, you can build on that. You can build new instruments, etc., etc. And when it comes to Ildar's, what mentioned about covered bonds, we had such experience. We tried to do that. It was something like 2015, I guess. We tried to do that. Probably that was not correct time for doing that, but still, there were a fund, a kind of a fund, and there was such a vehicle. I guess that was financed by EBRD or IFC, I don't know, some international financial organization for doing that. Still, proper timing is very important. Mm-hmm. So coming down, and now I will stop on that to leave for the others also some space for talking. So, and then we are coming to the intermediaries. So what kind of intermediaries should you have? Of course, typically you have investment companies, you have brokerage companies, etc. You can have different types of licenses, blah, blah, blah. But one of the most important market participants are banks. So how we are attracting them to the capital market development process? Because they have embedded conflict of interest. You know, they want to raise money through deposits and then to allocate those through loans. So, and typically the margin there is much higher than if they do that through capital market, right? So how to eliminate this conflict of interest, that's another story. Issuers. I can talk a lot about corporate governance. Tomorrow we will have another conference related to corporate governance. I will be moderator there, so I'm inviting all of you there, and we can talk in details what the corporate governance is and how it should be. So, but the corporate governance and the governance itself, that's another story. Yes, I agree with my colleagues, with Grigori, that he's saying that we should change the mindset of how people are reacting and thinking. So there are some hints how to do that. I will talk about that tomorrow. And investors. For investor, basically, his investment should be easy, fast to do, not like going to brokerage house office and then filling out some application, etc., etc. It should be fast, easy, and it should be attractive. Mm-hmm. I mean, attractive from the perspective of interest rates. You know, now what we see and what we have been talking in just during the networking is that the interest rates in Armenia for government bonds, for corporate bonds, are quite attractive. And I would say those are also attractive, for example, in Georgia. I'm not talking about Uzbekistan, where you can find, let's say, investments for 20-25%, of course, in soon. But still, I mean, if you are it's interesting. It's interesting. So everything is there. So when we are talking about how to build the capital, what are key factors? I have indicated that highlighted just spheres. I can talk about each of that.
You should publish a paper.
Yeah, we are doing that on a regular basis, our federation. But I will stop here. So what I would recommend, my takeaways from my speech takeaways, but anyway, my takeaways from my speech is the following. If you would like to develop capital market, you should concentrate and focus on that. Eliminate conflict of interest on different levels, as I said. Then push the liquidity there. And another thing is financial literacy. So we should spend money, energy, resources, etc., time on developing financial literacy.
Actually,
thank you.
This is what we tried to do from Converse Bank when we first issued our corporate bonds. We were trying to make a little bit wider the menu of products, and I think we're seeing the results nowadays. Okay, any question to the panelists? Yes, please.
Good evening. Hello?
Yeah, it's working. It's working.
Hello. My name is Ashot Yengibarian. I am the CFO of Acedel Glasswork Group of Companies, which is situated in Armenia and is specialized in doors and windows and glazing products production. My question is regards the first slideshow. I forgot the name of the Mr. Mr. Vahe. Do you really think that inflation in Armenia is 0%? Why am I asking? Because everybody is talking about that, but let's check how this figure is derived. Have we done a research? What is the decomposition of this figure? Because if we go to a supermarket or just buy fuel, we can calculate and check that this is not the case. This does not make sense. I know that you derive these figures from the official statistical department, but let's talk a little bit about that. Let's criticize this figure, okay? And the second question is regarding banks. Maybe the representative of Converse Bank. The situation in Armenia is like banks have a lot of money. We can witness from the figures of the deposits as compared to GDP of Armenia, and it's a big share of GDP. What is the problem that banks don't give this money, don't allocate this money in real sector? I know a lot of businesses which go to the banks with real investment cases, and banks just make a ban. They don't give money because they say collateral, only collateral, nothing else matters. So what is the problem with the banking sector? Please comment. Thank you.
Thank you. Vahe?
Sure. I think if we could get the slides back on, this might actually be helpful. So to answer your question, so our mandate for price stability is to achieve annual CPI average inflation of 4% over a medium-term horizon. So our target, and the way we interpret our target, is in relation to the official metric for CPI, so the Consumer Price Index, which is calculated by the Statistical Service of Armenia. So, of course, when we think about price stability and what that means in the context of the broader macroeconomy and how we interpret that, right, our goal is we never try to achieve or think about inflation from the perspective of one product or item or service or something like that. We think about it in the context of broader macroeconomic developments, the broader relationship between aggregate demand and aggregate supply. So in that context, I think when one of the things that we try to do is not to necessarily treat the statistics, the official statistics, as kind of a God-given number. I think there's obviously we need to dig into the numbers themselves to understand what's driving particular movements in the prices, because the movements in prices themselves reflect developments in the real economy, of course. So one of the things we do, if we could actually push forward on the slides, I think to the 7th slide. Thank you. Sorry about that.
Yeah. No, it's not working.
It's unfortunately not working, but I'll ask you to remember about half an hour ago what I showed. So you can. I appreciate the vote of confidence. So one of the things we do, we look at additional ways of decomposing the consumer price index in ways that reflects different developments in the economy. So one of the things we've developed is a non-traded sticky price index, which is intended to better reflect some of the underlying demand conditions within the economy itself, rather than being affected more by things like developments in global commodity markets or developments in kind of exchange rates and things like that. So we try to think about different decompositions of the CPI to help us with that. Of course, the other thing I'll mention, when we look at individual prices, it would be folly, I think, from the perspective of a central bank to go out and try to target, let's say, fuel prices and looking at kind of something that comes from a global commodity market. I think the policy actions of the Central Bank of Armenia certainly wouldn't have much impact on Brent, and at the same time, I think I think it would be folly from the perspective of trying to achieve overall kind of price stability in Armenia and meeting that mandate over a medium-term horizon of trying to target individual products over kind of a period-by-period basis, as opposed to thinking about this more holistically from a macro point of view for the overall economy. Thanks.
Thank you. Before Grigori answers, I just wanted to tell you about few figures. The assets to GDP ratio is around 100%, and loans to GDP ratio must be around 70+%. So this means that the banks are actively involved in financing the real economy. And if you see the concentration of the Armenian banking market is pretty high. 6 banks are concentrating 80% of banking assets. This means that we are really struggling for good clients, and we're actually striving for good clients. I'll ask our head of corporate loans to take your contacts and discuss the project you have. But honestly, it's not true that we only look for collateral. We do project financing and pretty actively. If Grigori wants to add something.
Yeah, but before contacting corporate department, just I will give you my contact. We'll change the contacts and we'll try to figure out something for you. Yeah, that's what we're talking about. So in this panel, we're addressing these issues. So you need to go to the capital markets, and that's your solution. If you cannot just find out some loans or some other project financing from the banks, let's go to the capital markets. We'll try to help you and assist you to organize the issuance, the allocation, placement, listing, market making, etc. It is a matter of sense, matter of business. If that's in place, we can help you. So.
Actually, I see our colleagues from Moody's. They really can help you in getting rating, so you can get an issuance at a lower rate.
It's about the fees.
We'll discuss that.
Yeah,
we'll discuss that. Okay. Any other question? If not, we can wrap it up. Thank you. Thank you all for insightful discussion, and hope to see you all in London.
Thank you.
Thank you.
Thank you.